excitement has centered around downtown Fort Collins in 2013, with more on the horizon. Improvements are well underway on the Mason Corridor, with the long-anticipated Max Bus Transit system set to open in May. This system will link downtown to Harmony Road and has already spurred new infill development, with more to come. The Downtown Development Authority is moving forward on renovations to the Old Town Square Plaza in 2015. Anticipated changes involve removing the existing kiosk, reconfiguring the fountain and stage, and enhancing the connections with Linden Street. Other major projects at various stages of development include the River District Block 1, the Feeder Supply Site, Legacy Senior Residence, and Max Flats and Old Town Flats. OtterBox has been a significant player downtown and continues to acquire properties and bring employment to the area. Current holdings are extensive along the west side of Old Town. They continue to add to and renovate office space, restaurant space, a parking garage, and then are involved in a number of other investments in the area. Look for them to continue to shape the employment and ownership picture of downtown into the future. A major success story of 2013 downtown is the Woodward Technology Center on the former Lincoln Greens Golf Course near Lincoln and LeMay. The site includes 101 acres, with 31 being given back to the city for open space, wetland restoration, as well as the Poudre River Trail. Infrastructure work is well underway, with the first building set to open in mid-2015 and will include nearly 270,000 square feet and accommodate approximately 500 employees initially. When the campus is fully built out, it is expected to house up to 1,700 employees. In addition to the Woodward facilities, the site includes commercial space at the corner of Mulberry and LeMay, known as Woodward Commons. This 70,000 square foot mixed-use development is set to open late this year. Other potential projects impacting downtown may include a downtown hotel, the prospect of an on-campus stadium, the redevelopment of the Foothills Mall, and the continued enrollment growth of Colorado State University. As we look forward to 2014 and beyond, local and out-of-state investors and businesses alike will continue to see the unique energy and opportunities and will drive demand for commercial real estate. The future looks promising for downtown Fort Collins.
The commercial real estate market in Loveland saw a very vibrant 2013. In the industrial sector, we saw the absorption of most of the functional space that was on the market. This activity has led to increasing lease rates to the point where new construction is once again a reality. For the first time in years, we have 100% speculative building occurring and several build-to-suit lease deals working their way through the development pipeline. With a lack of supply, tenants are stepping up to pay the lease rates necessary and sign leases of sufficient duration to get these projects financed and out of the ground. The office market in 2013 saw incremental improvements over 2012, and we expect that trend to continue into this year. Vacancy rates are dropping through the 10% mark for the first time in several years. Landlords are slowly gaining the ability to raise rates, although we are currently still 10 to 20% below the high water marks of 2008. The retail market is also showing positive signs of activity. Most notably, the Bass Pro Shops at Centerra is expected to break ground this year, and that will undoubtedly spur additional retail construction in the immediate area. Additionally, well-located, fully developed retail sites that were acquired at significant discounts during the recession are showing signs of activity, with several projects under construction and several more in the development review process. Third quarter year-to-date retail sales tax collections are up approximately 7%, and we expect those gains to continue into 2014, providing retailers and developers alike the confidence needed to move some of these additional projects forward and get them out of the ground. Downtown continues to attract attention as well, with one mixed-use redevelopment project underway and several more undergoing feasibility studies. There are several good redevelopment properties available, with developers from throughout the western U.S. taking a hard look at downtown Loveland. Additionally, with the passing of Ballot Initiative 1A and Larimer County's commitment to keep the service center in the downtown area, we may see momentum for the redevelopment of the 2nd and 3rd Street blocks, and with the new county building being a catalyst for that development. So in summary, in 2014, we're looking for a very good year for Loveland, led in a large part by the industrial sector and downtown redevelopment.
I'm going to talk to you today a little bit about Greeley and what's happened in 2013 and what to look forward in 2014. We had a better year this year in both the industrial and multifamily sectors. The vacancy rates had hit historic lows, essentially sub 2% in most cases, and we'll see some new projects coming online in those sectors here in 2014. Functional industrial space, both really in the city of Greeley and along the 85 corridor, really has been either leased or sold and therefore absorbed, and we'll likely see some new construction projects happen in 2014 via build-to-suit and or possibly some speculation building. In the third and fourth quarters of this year, we finally started to see some greater activity in the office and retail sectors where they had previously been quiet, and we noticed better absorption overall and activity. In fact, we've even seen a few retail buildings and office buildings come up, go out of the ground this year. Some notable projects include, but not necessarily limited to, we had a Panera, Chick-fil-A. We also had Candlewood Inn and Suites, the Weld Larimer Crime Lab, the Noble Energy expansion of their facility that they currently have on the west end of town, Crop Production Services new facility, the Western Grain and Seed Building, and Fresenius Goodwill, Thompson Dental, and of course the completion of the Leprino Cheese Factory. One headline I'm very proud about here this year: Greeley earned the title of from the Milken Institute as the 10th ranked best performing city of 2013. So I think that's a great thing to celebrate, and that tracks the city's job, wage, and GDP growth. Things to look forward to in 2014: we'll see continued construction in both in the multifamily, single-family, industrial, and hospitality sectors. We'll see continued overall absorption in the office and retail sectors, and we'll see commercial land increase, at least sales of commercial land increase here as 2014 progresses. And then downtown, I think, is well positioned this year. We're seeing a list of new and exciting restaurants, retailers, and then also the possible advent of the conference and hotel center that will go in downtown Greeley. So look forward to 2014.
I'll be talking about the impact of the oil and gas industry in Weld County. The oil and gas industry continued to be a driving factor of the economy in northern Colorado in 2013. Anadarko and Noble Energy led the way, contributing 1/3 of Weld County's property tax receipts at $148 million. Weld County saw oil and gas production expand to almost 80% of total production for the state of Colorado this past year. This allowed Weld County to remain as Colorado's only debt-free county. These trends look to continue in 2014 as both production and services companies look to expand. Anadarko and Noble Energy again lead the way with large expansion projects already underway. The oil and gas industry has helped to bolster the industrial real estate market across northern Colorado, especially along the Highway 85 corridor. With expansion in the industry, expect more construction in 2014 as vacancy rates remain extremely low and a lack of suitable properties in the market. Oil and gas has also helped to push residential vacancy rates to historical lows in Weld County as more people come to the industry with the jobs that are being created. This should also help push forward single-family and multifamily construction, with many projects already in the pipeline for 2014. With the primary job creation of the oil and gas industry, we expect some strengthening of the retail and office markets as the service industries expand. We look forward to new construction and an increased presence of the oil and gas industry in 2014.
I will be covering the multifamily market for northern Colorado, and first I'd like to summarize how I ended up 2013. Sales volume for Fort Collins and Greeley remained relatively similar to the previous year. Loveland had a bit of a dip, however that was because of an institutional sale in 2012. Rents for Fort Collins and Loveland have remained relatively static from the previous year, whereas Greeley has had increased rents for the last 3 quarters. Vacancy for Fort Collins and Loveland have both remained under 5%, whereas Greeley is the tightest market in the area, with vacancy currently under 2% for that market. Values continue to rise across all markets, with continued investor demands and continued fairly low interest rates for the market. In summary, for 2013, investors continue to look to multifamily for strong fundamentals and a positive outlook. Looking ahead to 2014, multifamily market remains strong with job growth and desirability to live in northern Colorado. New construction will continue to boom across all metros, with 2,300 units in Fort Collins, 800 units in Loveland, and over 1,000 units in Greeley that are currently either under construction or in the planning process, and we'll continue to see this new product come to the market for several years to come. This new construction will help with the extremely tight vacancy rates across all metros and the run-up in rental increases. In summary, 2014 multifamily markets are a very safe place to invest in all of northern Colorado. I would expect rents in Fort Collins and Loveland to remain relatively flat with maybe a slight increase. However, vacancy to still remain tight, sub 5%. Greeley, I think, has the most upside potential. I think we will see rents continue to push up quarter over quarter and vacancy to remain still very tight in that market. And this is in part due to increased job opportunities and population coming into that market. In summary, northern Colorado's multifamily market looks very positive for many years to come.
Land. I'm not one for hyperbole, but it's fair to say that the Great Recession almost totally destroyed the land market in northern Colorado. A little history. In 2006, we had 185 land transactions of all type, with a dollar volume of $281 million. Records were broken in 2007 when we had 220 transactions with a total dollar volume of $337 million. But things do change. What goes up? Records were again set in 2009 as the transactions sank to 53 and dollar volume declined to 84 million. That's a decline of almost 75%. And you wonder why I have a slight grin at the temples. But 2013 marked the beginning of the beginning. Transactions increased to 126 and volume to 177 million. Not too bad considering. The most improved land market, 4 words: Fort Collins multifamily. Prices in 2013 were in the range of $12,000 to $17,000 per door. That is higher than they were pre-recession levels. The second most improved, single-family lots. At the low point of the recession, the proud owner of these lots, the banks, were selling those from $13,000 to $15,000 on average. Prices have now increased to over $60,000 per lot. And for the first time in 7 years, we're seeing development of single-family land. So what about commercial land, sites for retail, office, and industrial? There's been moderately good demand along Highway 85 because of the oil and gas industry, but the markets for retail and office sites remain two-tiered. If there are owner users such as banks or convenience stores, they will pay whatever the price is for that desired location. However, for investors, their outlook has remained unchanged. They have a time horizon of 5 to 10 years holding period, which equates to still a 60 to 80% reduction in prices compared to those before the recession. Sellers are bullish though. Asking prices have quickly reverted back to the 2007 levels. Realtec forecasts improved market for 2014. There are still headwinds. Financing is still difficult for some projects and housing prices are inflating. But our population continues to grow, jobs are being added, and northern Colorado is still one of the best places to live. We expect a good year in 2014 and looking forward to working with you to achieve that. Thank you.
2014 marks Realtec's 25th year in business in northern Colorado. Early in my real estate career, when I was transitioning from selling homes to selling commercial real estate, I envisioned the magic that could occur with a small nucleus of competent brokers working in an environment of respect and trust. What Realtec has accomplished since its inception in 1989 has greatly exceeded my early expectations, and our success, I believe, is a testament to what can be achieved when your true focus is serving your client. Many companies, both local and national, have come and gone in our marketplace, but Realtec has endured, due to the competence of our brokers and our culture of cooperation and collaboration. At Realtec, we anticipate that 2014 will be a very good year, and that some of the magic that we had seen in 2013 will continue. We look forward to being a part of this exciting dynamic. We look forward to meeting new friends and continuing our relationships with our clients that have made us successful for the past 25 years.